Hello and welcome to this week's investment update, in which we'll be covering the much anticipated redemption of the UK's largest undated gilt, the 3.5% war loan. George Osborne announced that the time is right for the Treasury to settle the £1.939 billion outstanding at par in March 2015. This will see over 120,000 holders receiving a cash payment for their holding. The 3.5% war loan accounts for 75% of the current outstanding perpetual debt and fundamentally marks the end of the war bonds issued between 1720 and 1932 to finance the Napoleonic, Crimean and World Wars. It has been speculated for some time that the government would announce this decision to refinance its debt, with current borrowing being around 2%. The decision does pose an interesting quandary for pension fund managers, who have widely held the war loan as a hedging tool for movements in the bond markets. Looking at the reinvestment options for retail clients, in order to gain an income yield close to that paid of the war loan, investors will need to take a 30-year plus view, with only 5 of the super long gilts paying over 3%. Investors with a shorter term horizon may consider looking at corporate debt securities, which typically have higher coupons and shorter maturity dates, but in most cases have lower credit ratings than sovereign debt. At Reyker, we can gain access to most retail bond offerings, with the London Stock Exchange retail order book being the most popular with our investors, with a number of short-term offerings paying in excess of 5% income yields, including Barclays, Tesco and GKN. There are of course hundreds of other opportunities available to investors, and these can be discussed at length with our experts in our markets and investment team. You can reach us on the number listed below or follow the link to our website. And thanks very much for watching.